Hola, muchas gracias por tenerme. Y sí, lo siento, mi español es muy limitado, entonces I'm going to do my presentation in English. And so some of you might be thinking to yourselves, oops, sorry, put that over there. What is a woman from New York, from a very, very large bank, doing here at your Conservation Trust Conference? And so allow me to explain. And I want to, in doing so, really tell you about 3 different things today and make 3 points. If you take these 3 things away, hopefully they'll have been successful. The first is, we actually believe that there's a very important role for JPMorgan and frankly all banks to play as we think about transitioning to a world of net zero. We bring capital, we bring scale, and we have developed quite a bit of expertise on climate. And importantly for this audience, we do work with a lot of conservation organizations, including our wonderful host, Profe Nampe, and we will continue to do so, and I'll highlight some specific examples throughout. I also want to highlight the role of investors. Of course, this morning in listening, certainly this has been highlighted, so I don't need to explain to you how important the role of investors are. I should explain specifically about my role. By the way, I loved hearing my entire bio in Spanish. I've never heard that before. But hopefully it came across that my primary responsibility at JPMorgan is actually on the investing side of the equation. So what I'm doing is helping clients to transition their own capital towards some kind of social environmental outcome, which I'll get into in a little bit. Certainly a lot of that is focused on climate. And so whether or not you're here because you're thinking about the investment opportunities of your own trust, or really any of you who are thinking about your own retirement, it is possible to direct that towards climate. And so I really want to emphasize, and I'll talk a little bit about what we do at JPMorgan, what I do in my role around that. And finally, I really do hope to leave you with some optimism today. We heard this morning that this is a critical point for the planet and all of the work that needs to be done around biodiversity. And so it feels pretty grim, honestly, but at the same time, especially when you looked at even just what happened in the last year, we do see progress. And so I want to leave you with a little bit of hope and optimism. It might be cautious optimism, but I truly do believe we are starting to see progress. And actually, I'm going to start there. I'm going to start, and of course, leave it to the woman who's from a bank that I'm the first one here today who's going to have slides with her presentation. But I do want to begin there, and I will go, if this works, click again. Hopefully I'm hitting the right button. Bear with me. Do you know if I'm pointing it somewhere? Oh, there we go. So I do want to begin there with what the progress is that we are actually seeing. And so you could look at this many different ways, but I've shown 4 different kind of catalysts or stakeholders as I think about how we see things transitioning and the progress that's being made. So first and foremost are consumers, and we start to see tons of trends around consumer choices that are starting to make a difference, whether that's a switch I personally made to I enjoy drinking oat milk now. The transition to electric vehicles. We see, when we poll people that people are more preferred for sustainable options now than they ever have before. And it starts to make a difference. You align that with corporate action. We know that the majority of Fortune 500 companies now are signing up to net zero pledges or some equivalent type of climate commitment. And so, that translates to tons. We'll get in later to talking about carbon offsets. There's plenty of carbon offsets discussions here today. That comes a lot from the demand from corporate commitments. Certainly, the government and regulatory policy in the environment has changed a lot. Needless to say, in the US, we were thrilled. We finally got a climate bill. They called it the Inflation Reduction Act, but it's a climate bill. And that shows tons of progress. It's a catalyst for a lot more investment. And there's plenty of other examples around the world like it. And of course, there is tons of opportunities for investors. So, as we note here, about $4 trillion is needed to invest into climate. And so that creates opportunities, real viable opportunities to invest in these solutions. And so for a bit more context, I will also show you, next slide, please. I don't think I'm driving it. Are you driving it? There we go. Thank you. I'll just shout out if you can bear with me. I don't think this is working. So we see a lot of opportunities for investors. And what you see here is throughout time, and this actually perfectly coincides, starting in 2008. I didn't design it this way, but the data was available going back to when I actually started my career in sustainable and impact investing in 2008. And this really mirrors the experience that I felt. which was that we saw kind of slow and steady progress in terms of growth, and what's on the top bar is in terms of investments into sustainable investing funds, and what's on the bottom chart is looking at private debt, and so the issuance of green, social, and sustainable bonds. And so it has completely taken off in the past couple years in a very meaningful way. The last bar on the top right shows sustainable funds as the end of 2022 at $2.5 trillion. And the other thing that we don't have in this slide, but that I'll note, is that we also track data on climate funds specifically, and there's a lot more data around that today. As of the end of June of this year, there was $500 billion towards climate funds specifically, and that is an area that's seeing the largest growth. So again, I just point to trying to paint somewhat of an optimistic picture that there is really a lot of progress here, and a lot of people are taking note. So with that as the backdrop for a bit of optimism, I wanted to get in more specifically to what we do at JPMorgan. And I thought I'd start actually by showing a video. So a couple of weeks ago, I was in London. We hosted our annual Sustainable and Impact Summit. And I wish I could have brought you all there with me. It was really inspiring. We brought a lot of investors, but also entrepreneurs. We titled it Innovate Today for a Better Tomorrow. And one of the segments was devoted entirely to the energy transition and the role that we can play. And so I'd love it if you could now roll that video. All right, so let me be a little bit more specific about what it is that we do. Oh, maybe it finally responded, but it went one too far. There we go. Sorry about that. So our approach to sustainability. Now this is derived from, and this is open source. You can read our climate report that we post annually, and the next one will come out in November. But our entire kind of approach to thinking about climate for the bank, the entirety of the bank, is rooted in three basic pillars. So the first is, and I want to be clear too, by the way, I'm not up here actually just giving a promotion for JPMorgan. And I thought about this because I don't think that that's fair. What I really am trying to emphasize in walking through this is all of the different ways that with capital, we can really make a difference. And so, yes, I will definitely highlight all the things that we are doing throughout that journey. So investing in climate solutions is the first of these pillars. And think about this across all lines of business. We have capital to help companies and investors scale. And so I'll get into a couple of different ways that we can do that. We also are meeting needs responsibly, which means really, as you think about it, and there's a lot of chatter about what banks do with financed emissions. And so we think really long and hard about that, and we have an approach to working with our clients. And I think it's a good opportunity, if you can kind of read it, to highlight the quote from Jamie here. Because what he often says, and this is kind of rooted in how we think about this, is that the world needs energy securely, affordably, and reliably today and into the future. But at the same time, we need to think about a transition to cleaner energy, and we hope that we can do those both together, that we are not mutually exclusive. So that's a bit about our financing. And finally, of course, we'll touch upon what we do within our own operations, and that does include the purchasing of carbon offsets to become carbon neutral. So I will skip ahead here. I got one more in the interest of time. I'm so sorry, it's really not working very well. Are you able to advance it? No? There we go. Okay. I have plenty of tech difficulties, Zoom difficulties at home. This is actually, I'm no stranger to this. So on scaling green solutions, within the investment bank, which is really where our big commitments come from that we pronounce externally, we have a $1 trillion commitment we articulated in 2021 to finance and facilitate towards green initiatives by the end of 2030. And so a great example of this, a couple of these are highlighted, but of course relevant to this audience is the work that we do with the Nature Conservancy. We've actually worked with them a number of ways over the years. We have a great partnership with them. But relevant to this example, we worked with them to issue a $350 million green bond that will help them protect land and sequester carbon, protect fisheries, et cetera. And so it's one great example of when we say we have this huge commitment, these are the assets, these are the work that we're doing towards that. And actually what didn't make my slide, because it was so recent, is that JPMorgan itself just issued a $2 billion green bond, our largest to date, which now brings our total green bond issuance to $4.25 billion. And so we'll continue to do that, and it's a large part of what we're able to do from our investment bank. But let me go next to what I do and what we do in more of the asset and wealth side of the business. And so when you think about sustainable investing, the first conversation I'll have with clients is, what does that mean and how do you do that? And so it's easier kind of to dissect it into different approaches that you can take with your capital. And so, you know, this leftmost column on values-based investing is really just saying to us, you know, we want to align our portfolio with our values and potentially remove certain investments from our portfolios. So the most obvious example of this in the context of a climate-focused investor is going to be to remove fossil fuels or reduce fossil fuel exposure from the portfolio. But sort of as you move to the right in this entire framework, you know, we lean in more to positive investments. So you've probably heard this acronym or this buzzword ESG, environmental, social, and governance. This really just means that portfolios are thinking about those factors as relevant to how they manage money, and they're additional and very material factors. And so the total portfolio might not just be environmental or just be social, but it should have better sustainability companies and outcomes. And then the last two categories are really where you're starting to direct capital. So for climate investors, there's a lot you could do in the public markets, in venture capital, to say, I want to focus on climate and direct towards clean energy funds and a whole host of different options. And actually, the way we then talk to clients when, you know, I have a client who says to me, I want to invest for climate. How do I do that? What are the options? And we consider our role to be a lot of education with our clients. We often talk to them about this approach, which is our 3 R's for climate. So the first being reduce or decarbonize. And so some sample investments that we show here, you know, of course, there's renewable energy production, but it's also really important to think about energy efficiency. The second category is remove. And so naturally here, we're going to talk about nature-based solutions or the technologies that are trying to remove carbon from the atmosphere. And retrofit. You know, this recognizes, and there's been comments already this morning about how we don't just need to mitigate climate, but we have to live in a world in which we adapt. And so actually one of the examples given this morning was around agriculture and agricultural technology, which I think is a great example there. So, you know, there's a lot on this slide and a lot we talk to clients about in my brief time. I'm going quite quickly. But, you know, we have a lot of fund options that align to these, and we can bring to clients along various, and not all of these are mutually exclusive. Some funds do several of these, but it's really important to think about like what clients are trying to do and bring them solutions that align accordingly. And so I recognize at this point in my presentation, I've brought just a ton of frameworks. And so what brings it to life for me the most is to talk about actual investment opportunities, or investment innovations. And so just quickly, you know, and rather than charts, there's pictures. And so some investments, and these were some of the companies that came with us to our summit, Nopla, who's using seaweed to try to replace plastic in a variety of different use cases. You know, I stand up here kind of shamefully with a plastic water bottle. I brought it from my hotel. I plan to continue to reuse it and refill it, but I hope one day, maybe, it'll be made out of seaweed. And there's a lot of other applications here, of course, that they're coming up with. 12 is a company that's working on a variety of ways in which to actually use CO2 to make fuels and materials. And one of the most interesting things that they talked about when we met with them was sustainable aviation fuels, you know, a very small but growing part of the market, and it needs a lot of investment from investors. And finally, Campbell Global. This is a company that we actually acquired in 2021, and it owns an actively managed forest. So this is an option for our clients, again, who want to think about carbon removal. And so that we, you know, the Asset and Wealth Management Division works with Campbell Global, and they also have extensive experience in Latin America. So let me briefly just touch on this notion, this sort of second chapter on meeting needs responsibly. And so we established a Center for Carbon Transition within our investment bank at JPMorgan. That was sort of the first thing that we did. And we also, and we're very public on these targets, we established these targets in each of these sectors. They're highly emitting sectors, of course. And these are clients that we work with in, you know, the top 3, oil and gas, energy, and auto. I won't go through the detail on the numbers. And then cement, steel, and aviation. And you can see the targets that we've set here. And we are committed to tracking and reporting on those over time. So they will show up annually in our climate reports, and I think it's a huge commitment from JP to try to move that forward with each of those clients. Again, this is where it comes to our influence. But when I show this page or I talk about it, I don't really think it says a lot about what we actually do. And so what does it actually mean to translate that into our work with these clients? How do we do it day to day? And so we set this carbon assessment framework. Of course, this is our proprietary framework. It's a tool we created for how we work with clients in these different sectors. And as noted here, we look at both quantitative factors like carbon intensity, but also qualitative factors. And importantly, what are these companies doing in their progress towards decarbonization of their businesses? And so we use these factors as we do an overall evaluation of how we're going to work with these clients if we want to do business with these clients. And so it's a really important component. And I don't think that people quite understand how much goes into that. There can be a lot of criticism for banks for financing these groups or these companies, but there's a lot behind the scenes, and hopefully this kind of helps explain what that looks like. And so let me wrap up briefly by going through that operational aspect, sort of the third chapter in our work. And so within our own operations, we are of course trying to reduce our operational carbon footprint, and we do this in a number of ways that are listed here. Some of them obvious, like we're going to source renewable energy. We're trying to reduce waste, reduce paper, avoid e-waste in landfills. So we have very specific targets, as you'll see, around a lot of these. But to complement our emissions reduction strategy, we have an annual commitment to neutralize our emissions that we have not yet eliminated. And we do this across Scope 1, Scope 2, and 3 emissions. And so if part of these efforts, and I know this is really relevant when you're in this region, and a lot of you are thinking about this, we do participate in the voluntary carbon market. It's an important tool for us for optimizing investments in climate technologies to remove, and in some cases even reduce emissions. And so we really do believe and advocate for the fact that these carbon markets are an important part, an important consideration for decarbonization. A couple points we note here: fast-growing market, both from a supply and a demand standpoint. One of the pitfalls has been a lack of standardization, but we do feel like that's improving, and we see a lot of advancements. So for example, direct air capture has been something I've seen a lot of criticism of. It's too small, it's too expensive, it's going to take too long, but we are really starting to see progress there, and we do participate in that market. So again, the role we can play is really in providing strategic advice to our clients. Our Center for Carbon Transition actually recommends and helps clients purchase offsets. We've worked with companies in the ecosystem. I'll highlight Climeworks, who operates the largest direct air capture facility in the world and was a client of ours. I mentioned Camel Global, and of course, the role we play in our own operations to buy carbon offsets. And it was important to note that we actually made a very big announcement about this in May. So we announced that we purchased over $200 million in carbon dioxide removal projects. And again, purchasing these removals was for our business and our own goal to be carbon neutral. But it also is really, and some of these choices we made were about being part of this industry and supporting the development of these carbon removal technologies. And so the last bit on this, and I know this was a question that I've talked to people here about, is, but how does JPMorgan do that? And how are you evaluating what is a quality offset? And so again, without the lack of standardization in the industry, we had to come up with our own framework. And so I'll leave you with these 8 pieces here. We actually are very open source about this. We have a paper called our Carbon Markets Principles, which I encourage you to read. But the key points here, some very obvious things like, does this project actually exist? Is it real? Can you measure it? But some of the harder things, like we really are focused on additionality. Would there have been an impact if this project did not take place? Leakage avoidance. You can't avoid something in one other place, but then the carbon emissions are displaced to someplace else. And really importantly, and I think there'll be a lot of conversation here about this here over the next couple days, is this notion of climate equity and making sure that the projects, where relevant, are supporting indigenous and marginalized communities. So I know that was a quick whirlwind. A lot of information, but a lot of this is really open source. I encourage you to read our climate report, this carbon principles report, and I hope it wasn't too much. I hope you did take some nuggets away, maybe places that we can partner together. I encourage you all to think about us as a partner in this journey, and certainly reach out to me and my partners if we can be a help to you. But I just hope that we can take our collective sense of urgency and really turn it into action through finance and investments. So, muchas gracias.